The U.S. debt ceiling crisis. You've probably been hearing that term on different news outlets, on social media. Right now, there is a tentative agreement between President Biden and House Speaker McCarthy. But what exactly is this debt ceiling, and why do we have a crisis with this debt ceiling? Today, hopefully, I can explain what the debt ceiling is and how it impacts other areas of the economy like the housing market, credit cards, and the stock market. I will also talk about what will happen if we don't make a binding agreement with raising this debt ceiling or coming to a solution with this debt ceiling, because it can have some devastating effects on the U.S. economy. All right, so first, what is the U.S. debt ceiling? So the U.S. debt ceiling is the amount of money the U.S. government can borrow by issuing bonds to people. So there's a cap or a max to which the government can actually borrow money. And they usually borrow money by issuing out bonds. Yes, you can lend money to the government. I know it can sound strange, but yes, the government actually needs money, and it needs your money. And they ask you for your money, and they actually pay you back with interest for letting them borrow your money. And the debt ceiling was created back in 1917, just making sure that the government has all their T's together and they're not spending too much money and everything is right. There's just checks and balances within the government. Now, obviously, since it was created all the way back in 1917 and the economy has definitely grown, this debt ceiling has been raised numerous times. And a lot of experts believe we shouldn't have a debt ceiling because so many other democratic countries do not have a debt ceiling. Like, why are we raising this thing over and over again? We might as well get away with it. One major critic of the debt ceiling is billionaire Warren Buffett. Warren Buffett stated that having a ceiling to start with is a mistake. And Warren Buffett mentions and understands that this U.S. debt ceiling and just the number of times we go over in the government of raising it, and the Democrats versus the Republicans just going back and forth on whether how much they should raise the ceiling or what they should do about it, he believes it's just a political game. He states, these games get played and all the time that gets wasted and the number of silly statements you hear, it just seems such a waste of time for a country that got a lot of things to do. I love to see them eliminate the ideal because it results in these periodic stalemates where everybody uses it for posturing purposes and everything of the sort. So even big-time billionaire like Warren Buffett doesn't see a need for it and sees it as something that just politicians use in order to prop themselves up. Now, there are some pros to the debt ceiling that a lot of experts highlight. One is obviously to keep the nation finances in check. The other is just a way to balance and to fund different governmental operations. Now, one major controversy of the debt ceiling is a lot of experts believe the debt ceiling is not even constitutional. According to the 14th Amendment of the Constitution, it states that the validity of the public debt of the United States authorized by law shall not be questioned. And some people use that as an argument against the debt ceiling, where the amendment clearly states that. But I don't know. For me as a citizen, I think I should question the validity of the finances of the government in which I live in, right? In which I abide by their laws, right? And so I do see each side to the coin. Now we talked a little bit about the history and the controversy around the debt ceiling. Now, what's happening right now in today's news about the U.S. debt ceiling? Well, we reached our debt ceiling earlier in 2023, and earlier last month, a lot of experts were predicting that we were going to go in a default by the end of May, beginning of June. That's why there was a mad rush in the government to get this deal done. And during the last few days of the month of May, there was a tentative agreement between the different houses and between the different parties in the government. Now, let's say the U.S. does go over their debt amount. Well, essentially they go into default, meaning they cannot pay off all of their financial obligations. They cannot pay, number one, all of the interest payments to their investors of the different bonds they offer and the different programs that are funded through the government, like Medicare, Medicaid, Social Security, and other military personnel salaries. So you can see if the government default on that, that can have a huge impact on the economy. For example, paying the military. So the military is funded by the government. if the government misses a payment to pay salaries over to their workers, now these people can't have money to pay their mortgage. Now they can't have money to buy food, right? Which has a huge impact on all sectors of the economy, right? Because these people don't have money to contribute to GDP, to contribute to the economy, right? And so this has a ripple effects across the economy. Another issue that can arise from a default is that it lowers the credit score of the US government, right? And that happened for the first time back in 2011 when we had a similar issue. And the bond rating company, the Standard & Poor, actually lowered the US AAA rating down for the very first time in its history. And so that doesn't increase the confidence of investors investing and buying bonds in the US government, and it just puts worries in people's mind. Now, we do have a tentative agreement. It still needs to be passed. And a lot of experts believe that the default date was sometime between June 1st and June 8th. Nobody knows the exact date, but we do have a tentative date right now. But if we don't completely pass it, or if we didn't have a tentative meeting during this time, that would have huge impacts, especially as there are more growing fears of a recession. And most experts and even the government believe we're going to experience a recession within the next to 12 and 18 months. And so having this debt ceiling issue, this crisis happening, is huge right now. So it's very important for the government to alleviate this issue as soon as possible so the recession won't be as bad as they predict. Another issue that arises from the US going default on their debt is obviously, since people have less money because the government doesn't have money to pay their workers, is that governments start cutting jobs. So on top of you not being able to afford things, now you may even have your job cut because of this situation. And a lot of experts believe if the US government actually did go into default, more than 8 million people will lose their job. Now, talking about the stock market and the housing market, the two pillars of the US economy, the stock market, it behaves weird during a debt ceiling crisis or a debt ceiling situation. At times, actually, the stock market starts to rally up until that point where the government has to make a decision, and then it falls. And it falls like 10 to 15%, depending on how big this issue is. Now, in the housing market, the debt ceiling crisis impacts more mortgage rates more than anything. So the first thing about the housing market I want to mention is that location. In high areas where there's a lot of military people and a lot of retirees, where people are not receiving their Social Security where people are not receiving their Social Security checks or their military salary, those places will be impacted in the real estate arena, right? They don't have money to pay their mortgages. They don't have money to buy food and different things like that. And so those areas of real estate are heavily impacted by this debt ceiling crisis. Talking about mortgage rates, so initially when a debt ceiling crisis happens, there's a lot of fear in the market and mortgage rates actually rise because it's more risky to lend out loans to people when the government may not be paying like their different personnels or jobs are being cut. And so banks are thinking, I don't even know if this person can actually pay their payments on time. Let me raise the interest rate to make sure my investment is safe or whatnot. And so initially mortgage rates do go up, but once a debt ceiling crisis actually happens and the government still doesn't have a deal, what the Fed will do, they will start to lower the Fed funds rate, which in turn lowers the mortgage rate, right? And so when mortgage rate starts to dip, there's more of a demand usually for housing, and that can actually be decent and hopefully lower home prices. So right now we do have a tentative agreement with the US debt ceiling crisis. We'll see in the next few days if it's actually going to be passed in the government, and we'll just have to wait and see. I was reading this about the news. I was like, let me research this. And I just did a ton of research learning about other debt ceiling crises. Is this something that we actually need? Is this something that we actually don't need? And just its impact today. Hope you all, once again, enjoyed this video. Like, subscribe, comment down below, and I'll talk to y'all later.